Hello, everybody. So we're officially on. Welcome, everybody. My name is Igor Brzezinski. I'm the Chief Growth Officer for Hacken. And here today we have a fabulous panel, all industry leaders, specialists in their respective fields. So I am very honored and pleased to have you all. We have Jessica. I am going to just say your name so I don't butcher your last names. So Jessica,
I like
Executive Director
for
of
how long?
C4. I honestly I am horrible at last names.
All right. It's Levesque, and it's all right. I go by whatever sounds similar.
Jessica Levesque. So S is silent. Excellent. See, I've
You
learned
got
something
it.
already. This form is working. We've got Christina Dolan, COO of Prime Radiant. Tom Pagaler, President and co-founder of Trinity Security. Jean-Philippe Baudet. Baudet.
Us French people with our names.
Seriously, but I love it. I love it. Policy associate at the Digital Chamber, and of course, Hacken Yevgenia Broshevon, our CEO and our fearless leader. I'm a little bit biased here, but okay. So very excited to have everybody. So the agenda for today is to talk about regulation, see where this industry is, as I call it, the maturing industry is going in the right direction. And let's talk about what that really means. We all understand that, the bigger guys, institutional guys are trying to plug in and try to see how it goes. The institutions in the U.S. and regulators in the U.S. are finally forming some sort of regulation. We've got a Genius Act already in place. Now let's see how the Clarity Act is going to come out, right? So where the actual understanding and concepts are going to come out. So I'd love for you, everybody, to take a few minutes to, of course, talk about yourself, about some of the great achievements you've made, and maybe a few things that you'd like for our listeners to take away from this session. Let's start with Christina.
Well, hi, I'm Christina Dolan, and so I wear a couple of hats in that I'm a professor at Columbia teaching cybersecurity, and last spring I actually taught Industry 5.0, which included all the blockchain and all these evolving technologies that are part of this big wave, which includes stable coins. I serve on the boards of public companies, and as a result of my background in cybersecurity, I've written a book that's about to come out that is focused on these new cybersecurity laws in these regulations, because cybersecurity is having its Sarbanes-Oxley moment. That the requirement for understanding risk, continuous defense, as well as the having plans in case something happens, and having remediation in place, it has finally become a requirement. So my background's engineering, computer science. I have been an entrepreneur in the fintech space, insurtech space, cyberspace, for a number of years. And so thank you for inviting me to speak. I'm thrilled to be here.
Thank you very much. Continuous security is always on top of our mind. So yeah, you're preaching to the choir, at least us as security people. Jessica, floor is yours.
All right. Hi. Hello. Thanks for having me. So I'm the executive director at the Cryptocurrency Certification Consortium. which is a mouthful, so we also go by C4. We're a Canadian nonprofit. We focus on education, certification, and standards, and in particular, the Cryptocurrency Security Standard, or the CCSS, which is a key management standard working to make the crypto space a lot safer. And Hacken has some CCSS auditors, so always nice to see you guys.
Thank you. Yeah, that's been a great help, and in fact, that kind of describes what a lot of regulators are trying to enforce in one simple simple swoosh. We cover the whole soiree of services. Yevgenia, of course, tell us about all the wonderful things you're doing.
Sure. But first, I want to say that I really love the gender balance on this panel. It's not happening usually, but by coincidence, it happened today. I'm Yev. I'm a CEO and co-founder of Hacken. Been doing cybersecurity all my professional life, starting from university, and started my journey in crypto quite early, back in 2014. And now I'm super happy to see how we developed from the small sandbox of cryptography engineers to where we are now. And
she's so secure. She decided to mute herself.
She decided to leave the chat. She will be right back. I doubt it. I hope not. Tom, you take it, and then we'll let finish
Sure.
when she gets back.
Thanks, Igor. But I do like that she did say it is a diverse panel, which is pretty awesome, and the way we're displaying the women on top, that's pretty cool. So I'm Tom Pagler. I'm the president, co-founder of Trinity Security. We're a security firm that provides holistic cyber and physical security. A lot of our clients are in the blockchain world and crypto world. I started my career early as a special agent with the U.S. Secret Service here in the U.S. And I went on to head up security risk, fraud operations at different companies, including Visa, JP Morgan Chase, DocuSign, Neustar, BitGo, and others. What I really believe is that standards bodies, so I like C4 and stuff, that they're the ones who really help us guide regulations and laws. While I was at Visa, we created the PCI data security standards, PCI DSS. And later at Chase, I was the issuing rep for the board of advisors for the PCI Security Council. And then I'm currently an advisor for both the Kroc Institute of Tech Diplomacy at Purdue University, as well as the Heinz College CISO and CSO executive programs at Carnegie Mellon University. So I really feel that, getting bodies together and really talking through things and making things that make sense are the best way to get regulators, lawmakers to do things that we can actually follow.
Tom, you and I have had a chance to talk in person, and when you say getting bodies together, somehow it resonates multiple different things. So it keeps my mind going. But yeah, excellent. We got to get these people aligned. I get it. JP,
I meant bodies, standards, bodies, and people. But yes, thank you.
Yeah. So, all right, JP, go ahead.
Sure. JP Baudet here, policy associate with the Digital Chamber. We were the first and largest trade association representing the blockchain and digital asset industry. And I work specifically on our national security and decentralization verticals. So focusing a lot on anti-money laundering, KYC, know your ecosystem, trying to get ideas and updates from you guys in the trenches on the front lines and relay those back to lawmakers and rules makers, just to make sure that they're aware of what's going on, they're aware of best practices, and try to simplify some of the complexities of security for folks on the Hill. So excited to be here. Looking forward to the conversation.
Fabulous. We're very closely affiliated with Digital Chamber. We're contributing quite a bit. So it's really great to have a panel where the people that are creating these rules, the standards, and then having Hacken as a force of implementation, first line of defense. Amazing. I have to give Yev her second chance to do the proper intro, because we lost it, but it wasn't a hack. It was just the internet connection.
It was a lost connection. Yeah.
Go ahead.
Yeah, so where I stopped. Yeah, started crypto quite early now. Super excited to see how it's, how we're discussing crypto on the government level and the enterprises level. And we're as Hacken happy to contribute our cybersecurity knowledge when it's come to decentralized technologies and how it should be done properly to minimize risks of security incidents as much as possible, because even like by this year, I think we're already 3.1 billion lost in crypto hacks. And yeah, it's still October. We're like unfortunately in the positive dynamics or year over year when it comes to hacks. So for us at Hyken, it's really important to make sure that we contribute to this like new infrastructure that they're building and making sure that it's secure as much as possible, honestly. And we're like rebuilding trust in our industry that we've been like losing quite a lot along the way, I would say. Thank you, Igor.
Yeah, so we have lost, as an industry, we have lost quite a bit, but we've got a great panel, and by the time this ends, we're gonna know exactly how to solve this problem, right? So this is the idea. But all jokes aside, I think we've done a great job. But you know, the infiltrators, the guys that are impacting this industry, are getting more creative, finding new ways, and that's where the continuous monitoring, as Christina has mentioned, is very important and so much needed. So I'd like to say that the 2025 has been a pivotal year. It's been so important towards kind of where the industries has turned. I guess the acceptance from the legal standpoint that we're here to stay. This is no longer a wild west. We have matured. I've always say this at every panel. My background's in TradFi. I used to wear suits 7 days a week, and then I went like boycott, and I said never doing this again. And there again, I'm wearing suits, so can't beat him, join him, right? I thought I could, but anyways, what do you guys think? Why is 2025, in your opinion, is such a pivotal year with everything that's going on with the SEC? We've got finally Chairman Atkins that I feel personally has a right agenda in mind. You know, CFTC, FinCEN, all these great jobs, and they're finally saying security first, compliance is very important. I'd love to hear Christina's outlook on this. If you don't mind, tell us what you think.
So I've been in this space for over a decade, and I think one of the issues, for those who are innovating in that in that time, it was difficult to get a bank account if you haven't had the word blockchain. I mean, you didn't even have to be involved with Bitcoin or whatever. So there was a fear of the space and a lack of clarity in the space. So as a result of that, it was really difficult to be innovators. So we were focused on the risk aspects of blockchain, right? And even in that space, we would set up bank accounts, we talked to the regulators, we set up an account, and then we get these notices. And so now fast forward to where we are right now, I would say that there is a very definitive level of clarity that exists. And as a result of that, you can see that, the increase in, stablecoin usage. What's interesting and what I think is a little bit different in terms of sort of what this clarity provides is that I look at stablecoins as being part of an infrastructure. They're enabling a level of efficiency in infrastructure with a level of visibility that is very difficult to get from other sources. And so I think that these regulations that have finally come out that have made this space well defined from a regulatory perspective and less scary basically opened the door for innovation. And so, of course, that's what you're seeing is a lot of innovation. Now, my cybersecurity hat is that also provides innovation for the hackers. So it's sort of dual-edged, but I think it's sort of a welcomed clarity that I think is really required, not to use the Clarity Act, name there, but I think that that's one of the things that the industry has required, because I think everything was bucketed into this scary, horrible thing that really made it difficult to be an innovator in this space without having to sort of dodge all these regulatory concerns that weren't even valid.
Very good point. And I do think the clarity is much needed for innovation to kind of guideline our way forward, so that people are not afraid and clearly understand that what they're doing is not anti-law or anti-regulation. So yeah, that's important, and we'll touch that topic again because that is important. I actually on this topic, I'd love to hear all of your outlook on this 25. So I guess let's just go online and Jessica, you take it away.
Yeah, sure. Christina, as soon as you started talking about not being able to get a bank account, we just had a live stream earlier this week at C4 where I told the story about when C4 was trying to get a bank account in 2014, but because cryptocurrency is in our name, they thought we were an exchange. And we actually finally, it took like a couple months to get a bank account. And then once we got it, we ended up getting a big donation from Deloitte, and they froze our accounts because of it. So like Deloitte is donating and the money arrives and our accounts are frozen. So anyways, we've come a long way because that does not happen anymore. So that's really good to see. I really think that what we're talking about now is moving away from this regulation by enforcement and starting to do regulation by actual rules, which is really great because it's hard to feel like you can innovate when you're not sure what the consequences are going to be. So I think we're starting to shift a little bit there and look at things from a perspective where companies are able to be more forward thinking and really try to focus on what they can do ahead of time and build products and services around these controls, because like we said, they're starting to exist. We're starting to create rules and we can use those to guide us as we continue to innovate.
I guess the situation with accounts really touched a lot of people, and the fact that those of you that are actually U.S. native, meaning that you've lived here, you've seen its involvement, but the fact that cannabis got approved to open up accounts before the crypto did, that's a bit out there. So yeah, whatever. just throwing it out there. JP,
Yeah.
What do you think that is going to happen in 20? What has happened in 25, and how is that changing the way forward?
Yeah, definitely. So the debanking has touched us all. Our CEO won't throw any names out there, but our CEO did kind of go to the mat on this topic around January to kind of announce to lawmakers that we were debanked, the Digital Chamber, representing a couple hundred digital asset companies. So we've probably all been touched by this phenomena to one extent or another. I think that ending is super valuable, super important. I think we do need to see legislative fixes, and there are a couple that are kind of in the works right now. But I think for me, the most important thing I've seen is that institutions are in now, right? Where we've got the big players. It's not necessarily a move fast, break things environment, especially as we sit down with regulators and start having conversations about that maturity, Igor, that you were talking about a little bit in the industry. But I do think, Christina, that with the clarity we've gotten, and we have gotten a good amount, there's still some things outstanding that I think are kind of defining the current market structure fight and what maybe 2026 will look like. So didn't iron out all the kinks. And I think that kind of unfinished business is also one of the big stories of 2025. We made it so far, and we've got such friendly regulators and politicians kind of pushing forward this innovative platform. And yet we still haven't quite crossed that finish line. So I think that's something that we should keep in mind as we close out 2025.
Absolutely. So the year is closing out. A lot has been done, but so much more to be done in 2026. And in fact, it shows that Hacken is making such a aggressive move into USA and opening up an additional office in New York. So we're really putting roots here because we do believe that this industry is going to mature. It is maturing, and it's only going to flourish and become into something major. Yeah, tell us more about what has happened in 25 from your outlook.
Sure. As like we started building in this industry back in 2017, and we've seen quite a few cycles and quite a few narratives that have been changing every couple of years. Now I'm super happy to see that finally, I hope it is that use case that helps us with the mass adoption. If we look now, it's like tokenization and stablecoins. Definitely, this is something that we've been waiting for. And if look back with all this different cycles and different narratives, now definitely is the time where we can see interest from regulators, from enterprises, from all the TradFi guys. And this is where we merge the technology that we are building and the real world processes we have. And this is something super excited to see how technology is shaping the industry itself. So for me, this is what's happened, and the interest from like traditional industries is definitely a huge sign for the adoption that we hope it's happening.
Yeah, we're definitely seeing them jumping in. We're all of a sudden super interesting to them. I am willing to wear the suit, but I'm still not wearing a tie. Tom, go ahead.
No, Igor, I think everybody kind of already said it, but to summarize what I feel is you are absolutely right on TradFi. Like, that is what needs to be engaged for us to adopt all this. And I really thought NFTs were going to be that when NFTs were coming out, because they were getting adopted, they were getting they were being used everywhere. You needed banks behind them, but it just kind of didn't happen. They just didn't take off where we thought they would. But Yava's right, stablecoins have, and everybody is just absolutely adopting stablecoins. And the issuing side, the big side of the banks, is just absolutely adopting stablecoins, and that's huge for us because, unfortunately, Igor, we're gonna have to wear suits again. But it makes the crypto world, the blockchain world now, legitimate. The banks are in there, and that means that we are going to see the trend. To your point, like, just we are going to become kind of like a fintech that will go and evolve into TradFi, because TradFi is adopting these new rails that are cheaper, faster, better, more transparent. I mean, it's just, basically taking older technology and moving the banks into the real world here.
Like you said, the rails are there. They've been set by the industry prior. It's just for the adoption and proper adoption, setting up all the guardrails. The rails for us to slide through are there. Now we need to set some guardrails. And that's something that, the tools that are out there that are available and could be done. And of course, have to plug the hack in. We do all of that. JP, this next one is probably more for you. How do you feel that what do you feel is shaping the U.S. regulation right now? What is the biggest driver behind it? Do you feel like there are senators and government individuals are catching a FOMO and they're afraid of missing out of what might come? Like perhaps maybe in the next Apples and Googles.
Yeah, I mean, I think that everyone's kind of on board with the idea that this industry is here to stay. I mean, I think Jessica mentioning the shift away from the regulation by enforcement was an excellent first step. And now I think the current fight is kind of outside of the industry. We do have questions around the actual like meat and potatoes of what's going on. We have, how do we incorporate AML KYC in DeFi where there's like non-custodial systems? How can we best leverage the tools like Hackett provides? I'll just keep rolling through. How do we best, leverage tools like Hackett provides to give you that real-time update? Are we looking at on-chain and off-chain, cross-chain movements of funds? Are we looking through mixers? I think that those national security questions are still forefront for Democrats. Everything's kind of overshadowed by the current shutdown and the politicking going into an election year, though. So as unfortunate as it is for builders and for security professionals operating in the space, we are a little bit kind of being pulled around by politicians, some of whom really want to make sure they're at the forefront of this next revolution, and some of whom, maybe haven't quite come over to our side, maybe still have some concerns. So I think getting those two sides to talk to each other is probably going to be the easiest and best thing that at least somebody in the policy side can do. Hopefully I can, help set up an environment where you guys can all come in and actually start educating on things like the specifics of how do we put in place the security first framework, security by default kind of a thing.
Great. I did miss a little bit on my end. There's also some connection problem, but what I caught was right on the money, and I think that's actually very, very accurate. Jessica, what do you think is kind of holding us back? Is there something that, us specialists need to be more engaged? Do we need to be? I mean, I'm in Washington right now. I'm in DC. So should I be walking over to the White House and talking to them, or is this they have an understanding? And then why are we not like running forward with this?
Yeah, I think education is an issue, making sure people understand exactly what's going on the security side. And it is really complex. So to expect somebody to have an understanding of, the regulation, all the things that they're working on, and then also really a deep understanding of, let's say, security practices, I think is impractical. So I think we need to do some education to make sure that people are more informed. From our perspective, we are the certification and standards body that has the cryptocurrency security standards. So what I'm looking at is kind of a narrow focus in terms of improving key management practices. And Yev, you talked at the beginning about all of the hacks and the money that's been lost. And a lot of them is because a lot of the loss is related to poor key management, losing keys, having them stolen, all of these different things. And I think that it's a huge, huge problem. And we do have the resources to change it. It's getting people on board to do the things that are kind of a pain in the ass, to be honest. Like, you have to go through and do all of these things, and companies have to right now decide to do that. There's no enforcement. I think it's coming. I think there's regulation that's going to come with custody and making sure that things are being secured properly. But right now it's kind of on companies to make the decision themselves. And I think a standard like our security standard or other standards that come from the industry is really the way to go, because then we're guiding what makes sense for our ecosystem. And we're trying to make sure that it fits for the technology and for innovation and all of the things that we love about crypto and digital assets, and have it also fit into the regulatory landscape. So I think there are a lot of different pieces going on. No, I don't think, Igor, that you should go get arrested banging on the White House. So please don't. I want to see you next week and not in jail. But I do think that there's a lot going on and we're doing our best. I always think there's more things we can do, but most of us also have other things that we're also advocating for. So there are a lot of moving pieces to this.
Okay. I guess the next question I'll probably this is more for Christine and Tom. Where do you, because your background in security, where do you think we're gapping? Where do you think are some of the things that need to be talked about that are not, in terms of regulation, compliance, and what are the things that Hacking had started the smart contract audit as the must have, not like good to have. So what do you think is the next way forward? Things that we right now pushing and wanting to see implemented in regulation as a must have for improvement of all well-being of the industry.
So just to kind of start, I think that security's always had this issue in that until somebody gets hacked, which anybody like myself who's been in this space have had SIM cards ported and everything you can imagine. People don't really think about cybersecurity. So even in writing this book on cybersecurity regulations, it was surprising reaching out to some people who have been serving on boards for some time. Will say, oh, well, the CISO comes in, we have a really good CISO, so I put 100% trust in them. They just tell us everything's fine, and then we move on, right? And you're like, are you kidding me? And they're on the audit committee, which I chair an audit committee, so I'm very sensitive to the amount of effort that you put into both the sort of financial, the process of attestation and the work that you put into an audit from a financial perspective, which has similarities in terms of how you do a cybersecurity audit, right? And yet it's surprising how many people who now fall under the regulatory requirements of SEC, for example, the new SEC rules that came out last year don't even recognize what that means, right? What the disclosures, what that risk means. And I'll give an example because I've been working in the personal risk space for some time as well, and the home vector and the personal vector is the biggest vector. I mean, if you look at even in the crypto space, or the threats in general across the board in cybersecurity that come in through a person through their home. Most people don't even update their devices or even know what IoT devices are. They don't even put passwords on their cameras. And you go to a product like Shodan.io and you can basically see all their devices, and it doesn't take much expertise to figure out how to hack them. But that's the most vulnerable and most successful way that a hacker can get into an enterprise. I mean, you look at all of the products, there's a bunch of product maps for all the cybersecurity products that are in the enterprise. But the home, individual piece of it, that's always been the vulnerable piece. And people don't recognize that, like, for example, if you work from home in a SEC regulated financial and New York DFS or any financial institution that has any sort of regulatory requirements, you have to have enterprise quality cybersecurity wherever it is that you're doing your work, right? And most people don't even understand that. Like they might know that they have to register with the SEC, but they don't recognize the cybersecurity requirements or the vulnerabilities. And so just by hands down, I mean, I think it was Jessica who talked about key management. I think they were saying that like 23% of ecosystem threat in 2025 has been focused on targeting individuals versus the service platform. And so one would think is that people would put something in effect to actually try to make sure that weakest link, highest vulnerability is hunkered down. But most people don't even understand the SEC requirements that they do so, right? I mean, the liabilities of being C-level executive on a board, having this regulatory requirement to treat your home office or environment as an extension of the branch office. Something as simple as that, people don't understand. So kind of going back into the cybersecurity requirements, I think there isn't an appreciation for the requirements for cybersecurity in general. And so the expectation that people will apply, this to key management or even processes and controls is a big expectation, because most people don't have the, let's say, fear or the, that requirement sort of high on their list. And I think that's one of the biggest problems that exists today. It's the weakest link. So I think there's one statistic that says, so overall the average hack in an enterprise is 4 million, right? In the United States, it's 10 million, and higher even in the financial space. But if you go through an individual, you're into the enterprise, your likelihood, the average hack is 17 million. So as a hacker, you would say, I'm going to be more successful and profitable going through a person than I am through this, enterprise that has all these other tools in it. And so it's just surprising to me, with all the regulations that recently come out that basically define the requirements for senior leadership to have an understanding of the risk, continuous defense, and then have remediation plans, and yet they have very little understanding of the risk that they bring to the organization and basically what their role is in that. So I think a lot of work has to be done, and it's not just in the crypto space, but the crypto actually has a higher level of interest, because the not only do you have a high success rate, but it's like there's money at the other end. It's not like you're stealing data and putting it on the black. Like it's a direct revenue opportunity. You don't even have to encrypt data and do ransomware. You don't even have to do any of those things. You just take the money and run. Yeah. So I think that there's a bit of education, and people are not understanding the regulatory requirements that have come. And as I said before, cybersecurity is having its Sarbanes-Oxley moment, and the parallels are really strong. And I have that as part of my book. But I just don't think people appreciate that.
Can I just jump into what you were saying real quick, Christina? I really appreciate what you were saying about senior leadership and taking accountability for it. That's one of the things we just added to our standard for this new version 9.0. And I think it's a big deal. If you are in charge of something, acknowledge you're in charge of it. It puts that accountability and ownership on you, not necessarily of the keys, but to do the right thing, because your name is attached to it in a public way. And I think formally acknowledging these responsibilities in writing is a really good way to prove to others and those in the company that you're actually, all the stakeholders can see you're the one that's saying you're doing these things. And I think that maybe it's kind of naive to say it's got to come from within to start, but until there are rules that we have to abide by, hopefully people that recognize they're in these positions can take the steps needed to do the right thing. I mean, right? Do the right thing. But we just talked about the all of the hacks and the amount of money lost. So I get that sounds naive, but I think it's a place we can start.
I absolutely agree. Senior leadership needs to take responsibility for it, and I think if they do, then the outcome would be different. Everybody would be afraid for their the other end. So yeah, very important. And then with Christina brought to mind the weakest link, and that's a very good point. Nobody really understands what that really means. We're only as strong as our weakest link, right? So everybody always searches for that, and we've been seeing social engineering taking up a major leap in how hacks are happening and how things are being infiltrated. So it's very important for us to be prepared and to understand what an incident looks like, how to respond. That's also an important part. It's a little bit off topic, but I think I would like to see that being as part of the regulatory requirement for the training, for the employees, for the teams, for part of the regulation, for everybody to understand the do's and the don'ts and understand how to respond, because ability to timely and properly respond is so important. Tom, you probably have some expertise in that, right?
Yeah, and I think to answer your question, Igor, like kind of earlier, like when we're talking about the U.S., I do like where we're headed right now, and I think we have the right people in place who are trying to push this in the right direction. I'll even call it like David Sachs is the advisor right on the technology and science. He's been in the crypto space a long time. He's invested heavily in there through Crap Ventures. I think he really understands crypto blockchain, which is great. However, I do think we still have gaps around digital asset definitions, like what is a security versus a commodity versus a payment token is still in place. We have to address that to make things just easier. And I know we have bills and acts and everything coming together that should clarify that, which is going to be great. But the custody and staking models still remain pretty gray. The clarity is emerging around like disclosure, AML, KYC, cybersecurity expectations, but it's still kind of interpretive, and the consistency is kind of a challenge. And I do think, as I said, the standards bodies such as C4, CCSS, all that is, we need to really start to look at that and saying, okay, what can be put into law and what is the things that no matter what we're going to need, because you don't want to create laws that later become irrelevant, and then you're trying to, you're putting resources into something that just isn't relevant because it's against the law not to have it. We want to make sure that we have those kind of things come together. And I think the areas that we really, when you're talking about prescriptive, like we need to really focus on, we've already talked about this, like access and key management, right? I mean, that's the pre-process. If we don't have the keys right, we don't have access to things, we're just going to lose all the fun. So it's got to just be at its core level, some kind of process in place for that. Then you have to have the monitoring and response, right? So we got to prove that we have timely action. We have alerts. It should all be automated. This is the stuff that's happening. So I've got my keys, I've got my stuff all in the right place. I'm monitoring, I'm making sure there's no incidents, anything like that. And then the most important part is the immutability. We have to show transparency at its core. And like we are blockchain, immutability is what we do. So we should start having public and private blockchains. The public blockchain is for proof of stake, proof of reserves, proof of everything. We are doing what we're doing. Our governance, risk, compliance, everything should go out on a blockchain so that we can see and say, hey, that company, that industry, that whatever is doing what they said they would do. It's here. Auditors can see it live. You can see statements, everything. Then you have a private blockchain where the data that you don't want out there is there. So we don't want to go and display our customers' resources and how much they have and all that, but we do want to display that we did everything right to confirm that they are someone who can operate on this, that this is not an OFAC sanctioned place. This is not somebody who is laundering money. It's just, hey, everything that we should do is here. Everything that we do to secure it is here. You can see all this. And by the way, if you need private records, you can go through proper channels to get that. And when you think of the TradFi, Igor, you and I come from, they can't even do that. So we have a chance to really build a payment system globally that is amazing. And then companies like Hacking can come in and they can certify, and then they can just certify right on the blockchain. So I don't have to go get my ISO 27001 certification and like go post it to people and share things or put things under an NDA. You can just look right away and say, okay, they're ISO compliant, SOC 2 Type 2 compliant, they, whatever, PCI compliant, whatever comes on that, it's just right there. So I think we're heading to a great place, but those are the gaps we got to address.
If I could jump in real quick, Igor, just because, Tom, something you just said on the immutability made me think of kind of a crossover. Christina, when you mentioned getting senior staff members, senior executives, kind of putting them in the driver's seat or the hot seat rather, and making sure that they're doing what needs to be done. I think that's a perfect example of like those attestations, those signatures, those should all be stored on chain, right? We should all, whether it's your regulator, whether it's your business partner, whether it's your user, we should all be able to check that this stuff is up to date. So just wanted to toss that out there because I think that's
I think it's a great idea. No, and I think you're right, because we do it in public companies do it in their quarterly updates and their filings. They talk about the top 10 risks, and it's all publicly out there. But it's like you got to go find the report. If every company did it at its core, like you said, JP, it would just be amazing, and we can do that, and that's what this industry is built on.
Got to lead by example.
Well, ideally, that's how it should work. It doesn't always happen that way. So, I mean, to the point where we are starting to adapt to the needs of this conglomerate industry, where we are now talking about privacy chains where things are only exposed as needed and not full transparency, which we all love blockchain for. So, I mean, I've got questions there. Like, are we really losing our favorite DeFi industry to the big boys? And this is completely off topic, but I'm just curious about your opinions, because most of us here have been in the industry for moons, and I'm seeing a substantial. Are you guys there?
We are. You're a little bit frozen, but we can hear you still. Yeah, we can hear you.
Okay,
Igor.
I am. Yeah. So your opinions on that?
I mean, I think it's jump in where you said, I don't think it's that we're losing our DeFi. It's that we're going to use our DeFi for what it's used for. And we have some areas that people are going to be hesitant to go in and show everything publicly. So we can take the blockchains and make part of it private, but you can make sure that the private blockchains are linked to a public blockchain. So you can't go hide things in the private chain. There's a record that it's happening, but the specific details that you might not want public are on a private chain that you can absolutely correlate to a public chain.
Okay.
I also don't think it has to be an even or here. I mean, we've got all sorts of privacy preserving technologies in the blockchain space that we should be leveraging as much as possible. Fully homomorphic encryption is finally something that's like doable and workable. ZK proofs have been around for a while, and they should be incorporated up and down, these ecosystems. I think we should be a little more creative, and that does require that people are aware of these opportunities and that, people like your regulators are going to accept them. But I think, C4 in particular has done an excellent job of kind of staying up with NIST and ISO and being really clear about some of those benefits. So hats off to you, Jessica. But I think just across the ecosystem, we should just be more involved with that tech.
C4, you guys are doing a fabulous job. Yeah.
Thank
so look, you guys writing it, we're implementing it, so it's symbiotic. I can't praise you enough, because we're literally talking to regulators about this, implementing the CCSS as one of their requirements. We closely work with quite a bit of them, and they are accepting a CCSS as the must-have. So it's actually a very very good thing to see.
Yes,
so
being added
in
a
order
lot of
for us,
frameworks. Exciting. So thank you for what you guys are doing too. We gotta change this. These hacks have to stop. I can't keep going home and my mom being like, "Oh, well, this happened again," and everyone thinking I'm some kind of criminal mastermind.
They don't actually think you're doing it, do they?
I hope not.
All right. So this is for our security specialist. There's a lot of things that is already commonly implemented, and we're all worried about the KYCs, KYBs, and other transactions. Where do you think we really need to be concentrating for monitoring on chain? This is all important but what other aspects? Because I'm a true believer that if we do a proper preventative measures, if we do preventative work as a security implementation, then there's less implementation of chasing hackers and looking. If we implement CCSS as one of the preventive measures as a must-have, security audits and continuous security. These are all, I'd say, preventative measures, right? What would you feel is needed to be added? Let's say if we're talking about monitoring, what would you add to that list of things of ongoing security?
Well, I was just going to add that obviously the continuous monitoring is a requirement, specifically with the activities on chain, which I think is important. But I think, kind of going back to what we were talking about before, when it comes to risk in general, people are not necessarily that aware of the sort of mature processes for measuring risk, controlling risk, putting controls in place, basically sort of the traditional approach towards cybersecurity. I would say that even those of us in the cybersecurity space have always had the challenge of sort of identifying, what the risks are and getting organizations to engage. And we all know that, AI is now a new factor in all of this as well. It's made it a lot easier for hackers to scan, figure out opportunities. It could do Montego graphs, figure out where people are, what they're doing. You can gather information about how they're on the internet. And it's so the level of visibility, even if people aren't on social media, you can still grab a lot of information about them and make them a target. I mean, if you really want to get a lot of information on someone and hack them, it's with the help of AI, it's even easier. So I think the first thing is an educational awareness, so that people have an understanding of the fact that when you have one of these roles where you have visibility, you are a target. Even if you don't have social media presence, there is still the ability to gather that footprint from your activities that are basically online, as minimal as they might be. And since the people are the easiest and most effective and most profitable way of getting an organization, I think the first thing that has to be done is a level of education in this mature process of managing cybersecurity with the right level of governance. I mean, I think that's the starting point. I mean, you could put a lot more technical solutions sort of at a lower level, but if you don't sort of raise the bar overall from an education perspective, all of that technology is going to help if the weakest link is not educated and doesn't understand how to protect, their entry point, let's say. And with AI, it's like, you look at something like Shodan and you realize that with a little bit of AI, you can do a scan, figure out how to, there's just so much that you can do with tools that are readily available to hackers, and a little bit of AI, it doesn't take that much to actually, figure out how to get at the executives. So, there's a lot of things you could do at lower levels, but that's by far, over 25% of the hacks came from sort of weak controls around individuals, right? So the question is, how do you improve upon that?
I think it's important to build on the both sides, both education and people, and also make sure that we are covering and minimizing as much risk as possible from the technological standpoint. So coming back to the question of monitoring, I believe it's important to have monitoring in place, have proper incident response, have responsible people for that, how always like rotating and on call and ready to jump in, because like crypto hacks happening all day, all night. There is no like closing bells and it's stopped and we go home and have a nice weekend. It's like all over, and we are global in multiple time zones. So it's really important to cover this part as well of the nature of this industry, that you're like always on, like no matter time of the day, what time zone you are at. But coming back to monitoring specifically, I think it's really important what Christina mentioned, to make sure that like people are educated enough and, with the, what's called the decent level of paranoia, I would say, in cybersecurity. And from other side, we should like monitor the whole perimeter. We need to understand the like if there is like some privileged calls happening, whether you are like changing the like admin rights or something like that. We definitely need to monitor all the significant funds movement and understanding what's going on. I think something like that happened a couple of weeks ago. We need to monitor everything connected to market integrity as well, to oracles, to liquidity changes, and definitely something else is the identity and sanctions list as well, whether some like illegal activities happening on chain. So basically, we should cover both like human side and also making sure that from technological standpoint, we are covering this as early as possible and having this early signs of upcoming attacks, and make sure that we have processes and like people in place that can react in the timely manner. And of course, Tom, you mentioned about AI and how everything is, becoming faster. Definitely, we should have this automated triggers.
Yep.
If we see something is going on, we just need like to react like this right away. So definitely building the system where both people are aware of what's going on and the technology is like alerting and preventing as much as possible in automated manner is definitely must for this industry, because it never slips, and it just like once it's done, it's done. Tom, what do you think?
I think I agree with you, Yev, and I think you're right. I mean, like, so Christina, absolutely governance at the base layer, right? We need to know what our governance is, our compliance, all of our risk management. Like, what are we doing? What are we saying we're doing? I think your monitoring is absolutely right. Yeah, but I think one thing that should be added in there is probably like key rotations and stuff like that. So anything with the key should immediately be reported up. So exactly, proof of funds, all that stuff, and then if there's key issues. But then on top of that, like we are used to trust pages. So if there's something that goes down, like there's a trust site like trust.google.com, trust.google, DocuSign.com, those kind of things. Like you can see when there's an issue and they report up. But we have a DeFi blockchain, so it should just be immediately when there's an issue, it's out there. Everyone can see what's going on. We're working on it. We're responding to it. And I think that it's really just like document like through a decision log, like what triggered the alert. So we all agree that, things such as key rotations being mismatched, funds being outside some kind of privileged key, doing activities that shouldn't, funds moved where they shouldn't be, or beyond thresholds, or like an OFAC mismatch, something like that. Okay, that triggers it. And then who assessed it? What's the action taken? What's the timestamp of approvals? And then just really make sure that that comes through, because that is exactly how you get regulators to understand and be comfortable in the space, not just regulators, investors, customers, users, everything. And again, I think that that's like the base. But then to the point earlier, I love the idea of, for Jessica, like C4, like not, hey, here's a prescriptive what you must do. You're compliant with the CCSS, because it's the same thing we did in the credit card space. It was like compliance around PCI. It's a payment card industry data security standards. It's like, hey, we're doing what everyone else is doing. It's not saying we know that things are going to evolve. AI is coming, everything's happening. It's so hard to be on top of that. But if we're all as an industry following the best practice and coming together and sharing stuff, and we have in the US information sharing analysis centers, the ISACs. So go to the ISAC, share information. We're allowed to share security best practices. We're allowed, this is not like, it's the stuff that is regulated is like an advantage or anything like that. We're not price fixing. We're all trying to be secure together. So we start saying, these are the monitoring tools. This is the governance we do. And by the way, the CCSS and other industry bodies, we follow them, and we get certified by companies such as Hacken to show that we're doing this, and it's on the blockchain immediately. That's how we really just absolutely take not only adoption into blockchain, but people seeing, hey, blockchain is actually better than what we just left in the TradFi space, because it can do this stuff it's inherent to the entire system. And we're eating our own dog food. We are using the blockchain to move your transactions, but we're also using the blockchain to show that we're doing it safely. We're developing trust. We're audited to the standards that everyone believes in, and we're audited by firms such as Hacken that everyone trusts.
If I can just add one thing, I agree with what you guys have been saying. And I think the one piece we haven't talked about is, maybe there's others, but what I noticed is this idea of having a plan. So like we can have all of this in place. We can focus on the security side and the people side and how they come together. But if you've got continuous monitoring, you've got the alerts in place, and we've got the people that should respond, but they don't know what the plan is. We've all been in crisis before, had something come up. And if we don't have that set plan, with what we should do, it's really easy to either forget or to, I mean, you have to practice. There's training and you go through and then it happens and the response is intentional. You're not just reacting to it, you're responding in a way that's thoughtful and can mitigate as many problems as possible.
So with everybody here today, I'm sure the industry is in great hands. Why aren't we all getting together and just pushing this forward? I'm gonna make the next one pretty simple and kind of well expected probably. But what would you guys see the industry going, and where would you guys love to see the industry going next 12, 24 months? I'm curious to see in your respective eye view, how are you guys seeing the industry as is going? We're seeing it progressing really quickly. We're liking it where it's going. Do you think we're going to continue to progress in that direction, or are we that this is as much progression that we've had for a little bit, and then we're going to stagnate maybe? What are your opinions, JP?
Well,
Maybe that's or yeah.
So I just wanted to make one comment that I think that as much criticism, and to Jessica's point where everybody thinks that all of this digital crypto stable, that like, you know, they're all like something that bad people use, right? You know, the level of visibility that you get from these particular tools and this infrastructure that's built that supports these tools is quite incredible. And for all these great, you know, travel rule, the, you know, AML, like all of these regulations, I would actually argue that traditional financial systems, you know, they can't see beyond the siloed, you know, travel, right? So you see point to point, but if somehow or other you get sort of into this like a tier 3 bank, and somehow you get, you know, money into a tier 1 bank, and it sort of looks, you know, okay, you can't see that you can't see where it's come from, right? So I think that the bar is getting higher in terms of the sort of regulatory piece of where the money's coming from, where it's going to, which I think is a good thing. And it also, I think, creates a level of efficiency. And so there's a lot of great things that are coming from that, which I think from an industry perspective will raise the bar overall in terms of expectations. But I'm still going to go back to the fact that I think that even with all the regulations that have taken place over the course of the last few years in the cybersecurity space, as threats have increased, there is still sort of a lack of understanding by people in the industry as to what that means to them, right? And so I think that over time, you know, I don't know if it's going to be training by enforcement, I think, as Jessica used that term, where, you know, people who aren't necessarily doing their fiduciary responsibility get hacked, and there's some sort of an enforcement that sort of stands out in the headlines and says, you know, if you don't do what you're supposed to do, this is what's going to happen. If that will be more of an educational turning point, because people will start to realize that there's a financial risk in addition to the loss or potential just brand and branding issues and losses in general in terms of value in an organization. I think that as a result of the nature of the industry, I think that there's going to be a wave of people that will learn by example versus learning by regulations, that I think will create sort of a pivotal moment in this sort of Sarbanes-Oxley world that we live, that really is enforcing regulatory requirements for transparency and really putting plans in place together to understand risk, continuous management of that risk, and having the plans to address, you know, the scenarios when they happen, because nobody has a plan that's 100% foolproof, right?
JP?
Yeah, I mean, Christina, 100% agree. I think I'm seeing a couple of phases, like in my crystal ball of what the next 12 to 24 months looks like. I think we've got competing interests, right? So we've got security professionals like you guys on this call. You are already aware of these risks. We've got builders and experienced members of the digital asset community they're somewhat aware of these risks. They've been through a couple of big hacks. Maybe they've been hacked. They now understand that importance. We're going to see a ton of adoption and new users who are using, maybe less developed protocols. Let's say like a DeFi is much more of a Wild West, even if we get regulations and market structure to kind of bookend it. I feel like there's just so much freedom that's given to the user in that environment. And it's just so easy to spin up a new protocol, a new token, that kind of having this passive monitoring would be a really attractive option for platforms, for exchanges. And now I've already talked about a bunch of different players doing a bunch of different things. Meanwhile, we're trying to figure out what the correct balance is in Washington with regulators, with legislators. Do we mandate these things? Do we point people towards groups like the Crypto ISAC? Do we champion individual companies like Hacken who have like really robust solutions for some of this monitoring, some of this telemetry, getting this out to the users themselves? So I think we are in for a lot of surprise, a lot of excitement, but also risk. And so it's just really important that we stay on top of, we as professionals in the security space, keep pressing home how vital this is, keep giving users easy interfaces that they can just kind of passively look at and see little green dot instead of a red dot, talking about risk factors or about the security of chains. Has this chain undergone an audit? They should. How many audits? How regularly? Do I as the user know that, or do I have to pour through? Yeah, Tom, we were talking about the transparency of the chain, but am I skilled enough as a computer user to go back through those records and identify that? So I think trying to not just go in one direction, but appease everybody, as difficult as it sounds and as much work as that puts on you, Igor, and you, Yev. I think that it's important that we kind of try to fight all these battles on all these fronts at the same time, so that we can make sure we're not getting outflanked by bad actors, by AI-driven bots, by whatever's coming next that I can't even imagine right now. So 12 to 24 months, more users, more security from all angles, more regulator buy-in and regular interaction with professionals like you guys in the space, making sure that any updates you have are being funneled in through. That's what I'm seeing. And hopefully that means that users are happy and that the industry is growing, right?
And JP, I'm just going to add on because you kind of, what you just said with me too. I think you're right. I mean, we're going to see clearer definitions. Obviously, we're starting to see it already with the CFTC, the SEC, everything coming through. But exactly what you said, there's a lot of people don't know, okay, fine, you're transparent to me. What does that mean? So I think what we're going to see is more demand for machine verifiable compliance, evidence expressed as data, not PDFs. And that'll allow for integrated audit layers that connect to on-chain events to off-chain governance. So what I'm saying is we'll see a rise of the public and private chains to automate fully within systems. So I don't have to understand it. It's out there, but the auditors do, the tech folks, everybody else does. So I think we're going to see this convergence of, okay, now we know what the rules are because there's going to be more clarity from the government in the next 12 to 24 months. But then we're going to start to use our technology to actually allow it to be verified by experts we trust. Because to your point, JP, not a lot of people are going to even know what it means when you show this stuff. But I'm going to understand that they've been approved by a company like Hacken, and it's publicly available, it's immutable, and it's a record that we see. And that's going to be really important. It's the same thing as the PCI when it came out. I'm just using it as a great example because how did you know if the credit card I was handing over and touching that system or whatever is going to get through and not get hacked and have to get done? You just trusted these other companies that verified PCI for it. So again, C4 and others following those standards. And I think the future of oversight isn't just more regulation, it's smarter regulation built on the same transparency principles that drive blockchain itself. So we're just going to take our dog food, make it part of it. And then, in the end, I think compliance is a form of resilience. If you build secure auditable systems, you don't just pass audits, you earn trust. And that's what we need, because trust is the ultimate currency in both financial, the finance and innovation that this space needs.
So the takeaway from this is that, as Hacking fights one audit report at a time, we still would like to relay the responsibility at self governance. So, like, take your own responsibility, DYOR, do your own research, get an understanding what the platforms that you're using, the exchanges, anything else, whether or not they're doing the bare minimum to stay secure. We do quite a bit of contribution in that regard, and I'll always plug all the things that we do, and we're very big on promoting DYOR for users, and having them giving them a platform where they can check if the bare minimum security are implemented in the project. So it's cer.live for our listeners. You can go check them out. It's for lack of better comparison, it's like Moody's but for crypto for security.
Let me jump in here for a bit. For definitely, what like we love to see is like more those who are building this space for quite some long, contributing to the bigger scale, and really would love to see more industry-driven direction. And like for example, the work that Jessica doing at C4, having the standards that coming from the industry, from people who build this and understand how it works, and then escalating it further. This is one direction that I really love to see happening. And second one is growth of like more sandboxes when it comes to regulation and experimenting with that, how to build this verified trust, how to build this like audits that are like clear and you can see both on-chain and off-chain. And this is like some of the work we do with some of the regulators for some pilot projects, like how they monitor the risks of all these new companies operating in digital asset space, what are the cybersecurity requirements there, tokenomics, governance, and everything else. So seeing more initiatives like that will definitely help to accelerate it further. And third one, definitely cybersecurity awareness. And that's why we are hosting this webinar in October. And October is Cybersecurity Awareness Month. So thank you a lot for everyone to contributing to that. I think it's really important to raise this bar and educate users like how not to get hacked, what is the bare minimum that you need to follow, and like explain as much as possible how to use the systems. From one side and from other side, systems should be as much like human proof as possible, because definitely we're still human is the weakest link.
So Tom brought up a very important element of trust. And so of course, you share about Hacking's trust and what Hacking is doing to enforce trust.
Yeah, definitely. And we were hosting this event Monday. Hopefully see you all soon there in New York and NASDAQ. And definitely that would be like the bigger topic for the whole day, like how we build this trust, both from TradFi, regulators, DeFi, and all the who making this industry possible. Because I believe trust is something that we need as the base layer to scale and get this mass adoption.
So for those of us that are listening, watch out. Trust is coming. We're going to do a lot of great things. This is just a teaser of all the great things to come. I'd like to have you guys take a minute and kind of maybe you have something to plug. I know Christina's doing a book. Maybe somebody else has something to share about. And then also the major takeaways from today's conversation. Christina, go ahead.
So I would say, obviously, I'm writing a book on I've written a book on this topic, co-authored, specifically because I believe that security as a whole is important to national security, and so if you don't implement it at the sort of endpoints, the ability to destroy or sort of take over and militarize IoT devices, et cetera, becomes a matter of national security. And unfortunately, I think the average person is probably got the highest level of threat that has ever existed, partially because hackers have all these great tools. The use of AI is possible, and the social engineering aspects are a big threat. So anyway, I think that we're having for those of us who've been in the cybersecurity, or I'm an engineer and I've been in the technology space for my entire career. and we're finally having that moment of, this is critical and very important, and the fines that will occur or the impact on your business or your life if you don't follow these rules will be huge. And so I'm celebrating the moment, and my book obviously talks about all these different aspects, but for those of us who've been in this space, it's amazing how long it's taken for people to actually realize from a compliance perspective, this is just as critical as financial audits and really understanding the financial health of the organization. I would say it's even more critical because you could take an organization down faster. I mean, look at Jaguar. I mean, this is not in the crypto or blockchain space, but just look at the impact that this one attack had on not just on Jaguar, but basically all the organizations that are part of that supply chain, right? So that's just a cyber example. But as we start building, stablecoin ecosystems that underline all these supply chains and interactions, if the endpoints, third-party risk is big. If we don't start implementing this regulatory requirement, making people aware, we live in a connected ecosystem. We saw that during COVID, right? So, unfortunately, all it needs in this connected ecosystem is one person to not have the required resilience, and affects a lot of people. So it's exciting for those of us in this space, but also scary for those who choose not to be educated. But thank you for having me participate.
Thanks for being here. Jessica, tell us where can people find more information about C4 and all the fabulous work that you guys been doing for so long?
Yeah, cryptoconsortium.org. As Yev pointed out, the standard, the CCSS, is community driven. And so we welcome feedback, contributions, or everyone who's on the committee is a volunteer. And we really, really believe that we need to build this standard. We need to continue to develop it as technology changes from within the industry. So the standard is public. It's free to view. You can send comments on it. And we really hope you will, because we don't want to, back to this idea of trust. We don't want to be living in this ecosystem where there is no trust. We shouldn't just assume we can trust people. We need to build that trust. And I think building the trust means proving that you should be trusted. And we've lost a lot of confidence in this industry. And I think we can build that back by building trust.
Very good point. Earning it back is very important. I guess at this point we are earning it back. JP.
Yeah, well, I think my takeaway from this conversation is that we have a lot of tools. We've got a lot of professionals who are thinking very intensely about how best to fight illicit actors in the digital asset space. We just have to have other people be interested in hearing panels like this, which is why it's so important. Thank you so much, Hacken, for putting this together. I think just the outreach it sounds like the biggest first step. The implementation can come later. We're lining that up. And Jessica, I will definitely make sure to take a look through those community standards and put those in front of our membership, because I know we have some individuals who'd love to weigh in. And I will plug, shameless plug, for the Digital Chamber's annual blockchain summit. We have our DC summit March 17th and 18th, where we'll have, I think we're at like 20 federal lawmakers right now. Is that? Yeah. Around 20 lawmakers right now. We're going to have hundreds of companies. We would love to see you there if you're involved in the space. Maybe even you'll see a panel or two or be on a panel or two talking about this very topic in front of a full room of blockchain builders. So that's going to be my plug. And thank you all so much for coming in and sharing with me. I feel like I learned a lot.
Thank you very much. I really hope I can attend. I can get an invitation, and then also by then hopefully there will be some clarity issued by these lawmakers, and we'll have something more exciting to talk about. Tom, what are your thoughts?
I think this is exactly what we should be doing. Like Hacken's doing a great job bringing experts together. You brought in people who are doing industry standards bodies. You've got people who are pushing policy. You've got professors who are, really digging into this and educating the next generation that's coming into this. I really think it's important that the message gets out about trust and at the base layer. And I think I'll do my shameless plug. Obviously, I started Trinity, co-founded Trinity Security with other friends who are in the crypto and blockchain space and security space. And the whole idea was this area just needs help. And I think that I encourage everybody, if you're there and you're starting to get traction, reach out to firms like Hacken or anything, get some security experts in there and really look at things. And as you build, the more you build on immutable records, transparency, that core governance, risk, compliance, don't just wing it and try to do it later. Do it now. Like right now, get your risk counsel in there, understand who you need to talk to, understand what you're aligning to. If you pick C4, align to it and build to it. My shameless plug, trinitysecurity.llc. But overall, like anybody just get help if you need it, because you don't want to call because you had an incident. You want it in place before that happens.
I can't agree with you more. And unfortunately, not too many companies know of what to do when something happens, and they scramble to figure out. And that should be something that they work on in preparation for, God forbid, nothing happens. It's like an insurance policy. We all hate paying for it, but like we got to have it.
But we love it when we get in the accident.
And yeah, please.
Yeah, sure.
See, but yeah, there's always that silver lining.
Definitely. So for us, we were like super excited to host this conference and having more conversations offline like this, because I believe that's like where we can move forward. And definitely we've been like kind of trying to do self-regulation in this industry for quite so long, building different like working groups, frameworks, standards. And hopefully now would be next step when we are making it like real and accepted in the industry in the wider range. And for us, we keep working on what is trust and how to provide it. One of the things that we're about to launch would be yield audits for stablecoins, both on-chain, off-chain financial risks. That's something that's super exciting to see how we go from like smart contract layer to all the system, both on chain and off chain, and where it leads us and what are the risks there. So stay tuned, and thank you all for sharing your thoughts. I think we need to have more panels like that and making actionable steps out of this. Igor, back to you.
That's exactly what we're doing, trust, so that way we could have more panels like this. Unfortunately, I have a ton of questions that I don't get to ask you guys just because of the time restraints. But thank you very much for your time. Thank you for coming here today and sharing the information with our listeners. And I am very eager to see all of you guys on Monday and getting a chance to see you all in person.